Hi, everybody. Nick Tsugali's here with CreditNewsDaily.com. Our first Ubu interview, and I'm pretty pleased to announce we have on air with us right now Devin. Chris is the host of Real Estate Talk Boston, one of the Boston power players for sure in this market. He is also a vice president of lending at Guaranteed Rate Mortgage. He is our go-to guru, anything mortgage related. Chris, thanks for being on today.
Wow, Nick, listen to that introduction. Yeah. Thanks for having me, bud.
Yeah, hey, we're glad trying, man. Yeah, roll out the red carpet, at least virtually.
I love it.
So, Chris, today we're going to talk about something that might seem a little boring, but the reality is it's huge. I call it the new rate. So private mortgage insurance, or just mortgage insurance in general, is becoming a major cost in the mortgage process. And with home values going up, and up, a lot of times people don't have that 20% down, so they're taking advantage of this mortgage insurance. Can you tell the viewers, what is mortgage insurance? Like, what is this thing?
Right. A lot of people don't even realize what it is. So PMI is known as private mortgage insurance, okay?
Okay.
And private mortgage insurance is required on any property that has less than 20% equity. So if you're not putting down 20% on your purchase, in most scenarios, there are a few different ways around it, but for the sake of this conversation, you are going to pay what's called PMI.
Okay, I gotcha. Where does the credit score factor into PMI? Why would it make a difference if you had a lower score versus a higher score in regards to this?
Credit score definitely plays a major role, and while a lot of people don't realize this, and they don't realize this with interest rate as well, the credit score can impact your interest rate and your PMI significantly. Let me give you an example.
Okay.
Let's just call it a 5% down conventional purchase, okay? And let's say you're looking to borrow $300,000, okay?
Pretty common.
On a $300,000 loan, if you have, let's say, a 750 plus FICO score, okay, your monthly PMI payment is going to be around, let's call it $135, okay?
All right.
Now, that depends on multiple different factors, but I'm just giving you an overall ballpark number.
Yeah.
Now, if your credit score is 680, okay, which is still in most cases considered a pretty good credit score, but it's not A-plus credit.
National
it's
average.
Increase your payment to over $220. Yeah.
Hold on.
So just right there, I mean, that's a $87 a month difference.
Let me ask you something. Someone that is even much lower, someone that's down to, a 640, they're getting one of these FHA loans. Like you read the statistics, 5 out of 10 loans are an FHA product. Someone's at that 640 mark. Is it that much more expensive at that 640 mark?
Just to put it in perspective, on your conventional loans, the numbers that we were just talking about, somebody's paying somewhere between 54 and 89 basis points. That's depending on the credit score we talked about of the 750 or the 680. When you go down the path of the FHA loan, used to be a lot more favorable. Their PMI used to be 55 basis points a month, but now you're looking at anywhere as high as 130, 135 basis points a month, depending on your down payment.
Wow.
So it's really one of those things that if you can stay away from FHA, I'm sure the Federal Housing Authority doesn't want me to say this right now, but if you can stay away from the FHA loan and go conventional, it's definitely going to benefit you.
I gotcha. I had a scenario recently where a client was paying about $350 a month in mortgage insurance. They were trying to get their credit score up, like begging to really get it up just to get into a conventional loan. They had the equity position too, just to refinance out of that PMI. Now, the Federal Housing Administration and his lender told him he couldn't just waive the PMI because he had equity in the house now. I mean, what's up with that? Are you stuck with this FHA PMI?
Correct, and great point. So with the new regulations that have been put in place for the FHA loan, it never goes away now. Whereas conventional, there are multiple different ways to get rid of it. You can, prove that you have 20% equity after your 12th month in the home. Maybe you did some home improvements, you're paying down your loan balance, and the market is improving. It might give you the opportunity to get out of it and you don't have to refinance. It's as simply as getting a bank-approved appraiser to come out, look at the property, prove you got 20% equity, and the PMI is gone. It's not an option with the FHA. Also, with the conventional PMI, at a certain point, depending on your scenario, it will automatically go away as well, usually between years 5 to 7. So there's a couple different ways to get rid of PMI down the road with the conventional loan.
What's your take on this?
Option.
Like, why do you think, because these loans you hear in the past were so absolutely cheap. Do you think it's just, the Federal Housing Administration wants to pull back? They want the lenders actually getting a little bit more skin in the game and taking on some of the risk? Do you think that's why they're upping their fees all the time? Are they solvent?
My personal opinion is that they might have gotten burned over the past 5 to 10 years, and now the client is going to pay for it, and their appetite right now is just obviously not there. And with this significant increase in PMI, if you look at FHA PMI, let's say over the past 3 or 4 years, it has consistently gone up almost 100 basis points, more like 80, 90 basis points, which on a monthly basis, depending on the loan size, can be hundreds of dollars a month. So definitely in today's loan environment, the conventional route is definitely better.
This is
another
awesome
reason
info.
to have a higher credit score.
Yeah, another reason to have a higher credit score.
And people don't realize that, and they think that their credit score is a small piece of the pie, but credit is one of the 3 major pillars, along with income and assets, that plays a role in somebody's loan. And you want to make sure that that credit score is as high as possible. You're putting your best foot forward when applying for the loan.
Here's one last question for you before we go. The perfect ideal borrower for you, okay? They're putting 5% down, for example, on a house. I mean, what is the score that's going to allow you to give them the best financing? What's that top tier, that creme de la creme at the bank? What should they have?
740 and above, it's really a home run. I always tell people that, you can get as high as 850, right?
Okay, yeah.
And some people come in, they say they have perfect credit, and they're expecting an 850 credit score.
Yeah.
The reality of it is, I pull credit for a living. I know you do too.
Yeah.
You really don't see that many people above 800,
Yeah.
and when you do,
I don't.
It's a true gem. So, I tell people when you pull it, if you're 740 or you're 790 or 830, it's like professional sports and watching your favorite team. If they won on Sunday in the NFL, if they won 21-0 or 35-0, you shut out the other team. It's a big win. It doesn't really matter. But going below that 740 range, when you go below, it really does matter, because in conventional financing, for every 20 points below 740, that can affect your interest rate. It can affect your PMI. It can affect the guidelines that you qualify for. It can truly be a game changer. So 740 is really that line.
Awesome. All of our action plans are at 740 for this reason. Chris, this is awesome info. Do me a favor. Tell the viewers, where can they find you on Twitter? Where can they find you on Facebook? How can they reach Chris Devin?
If you type into any of them, Real Estate Talk Boston, my Twitter feed is RE Talk Boston.
Awesome.
Also on Facebook, I'm at Real Estate Talk Boston. And if you go to boston.com, you can connect to us through the main page in the real estate section, or just going directly to boston.com/RETV.
Cool. If someone has a mortgage inquiry, do you have a phone number that you can give the viewers, an email address? Are they going to chrisdevin.com?
Absolutely. You can go to chrisdevin.com.
Awesome.
Give you all my contact information, or you can dial me directly at 781-616-1350.
Awesome,
Thank you for the opportunity, Nick.
Yeah, this was super cool. Guys, you can check us out anytime. We're on Twitter at Credit News Daily, at KeyCreditRepair.com, or on our Facebook page, YouTube /Credit News Daily. Chris, have an awesome day, and thanks for coming on. See you guys.